For the markets, the Sensex is down almost 500 points and the Nifty has given up on that 7,900 mark. In fact, given up on 7,850 very swiftly as well. The key reason for the sell-off today is global. The European markets are under a lot of pressure. Madhur, the senior global economist at Standard Chartered, joins us on the phone line from London to decode all that's happening across the world. Madhur, hi, good afternoon and thank you for joining us. Europe is under quite a bit of pressure this afternoon. Is it more to do with, the issue around Volkswagen that has dampened the sentiment, or is there something bigger that's brewing?
Well, I'm not really an equity analyst, so I wouldn't be able to answer questions on specific companies. But in general, I think the sentiment over the past few weeks has been very volatile and very uncertain. It largely relates to what's happening in China and also to some extent to what happened with the Fed. But really, all the uncertainty relates around whether China is slowing down too much and what impact that will have not just on Asian economies but also on wider markets through trade links, through finance links.
Madhur, hi. Do you get a sense that things can get a bit ugly in Europe?
Well, actually, in terms of the macroeconomic outlook, euro area is actually coming out of recession and is on a steady recovery path. If you look at the data coming out, if you look at the real side data coming out of Europe, then that's actually much better than what people have anticipated, looking at industrial production, coincident indicators such as the PMIs. All of these are actually improving and showing that euro area is actually on way to recovery. What we are, however, still seeing is concerns about inflation being very low, with oil prices being very low. And that's something that's going to keep the central bank, the ECB, very, very accommodative. So in general, our expectation is that actually the euro area is going to do much better this year because it is an oil importer. Oil prices are down. It has made massive progress in terms of the adjustments, improved ease of doing business conditions, etc., is making progress in terms of reforms. And also you're seeing some benefits coming through from stronger growth in the US.
Okay. Well, yes, that point is taken that there has been, stronger growth in the US, but the comments that came in from the Fed has made everyone quite nervous, where they alluded to a slowdown in emerging markets like China. How concerned would you be about a global growth slowdown that could be underway, and how would it impact emerging market economies like India?
Well, actually, emerging markets are at the very center of this, the concern right now. So any growth slowdown concerns are emanating from emerging markets. India does, of course, seem to be an outlier in this situation. It is one of the best performing emerging market countries, the major emerging market countries. Even there, growth of over 7% is still considered, is still very, very good. But in general, I think when you look at the global growth outlook, we think that there is a slowdown in emerging markets, which is going on, partly because a lot of emerging markets are commodity producers in the Middle East, in Latin America, and in Africa. But a lot of the big emerging markets are commodity importers. So you take India, China, and some of these other major countries, and that should be a boost to them over the next few quarters. Global growth will be supported by the pickup in the US and other developed markets. So overall, our expectations for global growth still remains for a very robust performance of around 3.1% this year, slightly better than last year. So yes, emerging markets are slowing, but developed world will buoy up the global growth story. I think the big concerns now really are to do with, can China stabilize its growth story? We do expect that to happen. We do expect that China will be able to use monetary policy and fiscal policy more effectively to be able to stabilize growth. But India, of course, as I said already, will continue to be one of the outperformers, given the fact that, it is an oil importer, will benefit from lower oil prices. There is some positive momentum in terms of the sensitivity towards, or the sentiment towards India as well. So I think India still remains covered from any external risks.
All right, Madhur, thanks a lot for your time today. Would have loved to discuss some more issues, but we are now running close to the market closing, so need to address that. The 40 point